Hey, welcome back. My name's Ryan, and today we're going to be going over M1 Finance from a video I did last fall on how to build a money-making portfolio, part 2, to keep you on the right track going into the new year and finishing out Q1 strong. So first, what is M1 Finance? So if you look at my screen, you'll actually see I have M1 Finance pulled up here, and M1 is a way to invest more actively than something like a Betterment or a Wealthfront, but it gives you the ability to pick individual stocks, ETFs, even crypto if you so choose. So today we're going to be covering the basics of M1, how to create a portfolio, and how to optimize it for maximum return. So stick around. So I went through what M1 Finance is. Some of the key features of M1 Finance is the ability to do fractional shares, automated investing, and portfolio rebalancing. So in this case, if I search for a stock here, the first thing I'm going to do is look up a stock. Let's just look at Google, for instance. Now, Google's $105 a share as of today. If I want to buy a share, say I only have $50, I can do that. So we do have the fractional ability to do that today. Also, the other thing I like is the low fees and the ease of use. If you look at the underpinnings of M1 and you look at what they're charging you, from day one, you're not being charged any fees in order to actually invest, which I really like. If I go back here, I'm going to actually go look at some of the news inside the market today. For those that aren't aware, we've had several banks that have failed here in the United States recently. So you're able to click on this. Now, the next thing I want to go over to is when I'm building a portfolio, I have different options. So what do I mean by that? Well, I can purchase stocks, individual stocks here. I can do fractional investing. I can pick a bunch of these stocks, put them in a portfolio, and simply, take $1,000 or $100 and split them up. I can also go in here and purchase what M1 calls funds or ETFs. Most of these are Vanguard. We do have some iShares. We do have some BlackRock. We have some SPDR from SPY over here. I've mentioned SPY several times. I'm actually going to put a link up here in the channel or in the video for the last video I made on M1 and see how it compares. I can also purchase crypto, which is great if you want to add some exposure to crypto in there. I also have another video on crypto and investing in that I'll link here. Now, I have a couple different pies, and pies in M1 that aren't familiar, a pie is just like it sounds. So you have a circle. You have different slices of the pie you can put in there. Now, maybe you want your pie to have one stock, maybe you want it to have 10, but you can slice it up to where each stock gets an individual or an equal share of that pie, and then you can go from there. Now, one of the pies that I started at the beginning of the year, and for those that have been watching the channel for a while know, I predicted these 5 value stocks for 2023. Now, I still have these in here, and in so far of the last, let's say, quarter, going back into December, right now I'm just about even. So at one point, I was up quite a bit, performances came back down, but I'm still gonna keep an eye on these. So if you're interested, I will share this pie in the description below, so make sure you check that out. If I go over here, I can actually choose some expert pies, and I would really encourage people to look at these expert pies if you're just starting out. You're just building a portfolio, you wanna invest in individual stocks, you want to have that ability to monitor and move things around, maybe sell out of some things, move some things in, take some money off. I would definitely look at that. So the next thing I want to look at is some of these different areas they allow you to invest in. So if I click on general investing, it's exactly what it sounds. You can choose everything from ultra aggressive to ultra conservative to moderate. You can see the number of holdings or stocks in the portfolio, the dividend yield. We've talked about dividends before. I want you to have as high a dividend as you can while bringing your expense ratio as low as you can. And we'll talk about that in a minute. But in this case, I'm looking over a 5-year outlook, and the risk here, if you look, I don't want to get extremely technical, but there's beta, there's alpha. There's the ability to look at a portfolio and see, from a volatility standpoint, how it trades to the broader market and what kind of drawdowns or what kind of dip you're going to see lowest to highest. Now, in this case, let's say I'm right in the middle and I'm saying I'm moderate. This might be a great portfolio for you to invest in. You might like this. So let's actually look at what's in this portfolio. So in this case, I'm going to go out to the 5-year mark. Over the last 5 years, it's brought me a 23% return. We don't have any fees here. So in this case, you're getting your dividends, you're not paying any fees to trade, and so on. So in this case, we've got a 2.443 dividend yield with an expense ratio 0.05. So loving the dividend yield, loving the expense ratio, and I love what I see in here. So we've got a lot of different ETFs. We've got bonds, we've got the FTSE developed market ETF, S&P 500, small cap, some iShares, treasury bonds, municipal bonds or munis, and then we do have a little bit of real estate, international and emerging. So you've got it all. So definitely, if you're moderately, if you're kind of in the middle, you like some risk but not too much, this could really be for you. On the other hand, if you're ultra aggressive, you want to shoot for higher returns, which in this case, it does have higher returns over the same 5-year period. You're looking at a 33% return. Now, in this case, the dividend yield is a little bit higher. The expense ratio is the same, but you have less holdings or less ETFs in this. So you have a little more concentration in one or two ETFs. So in this case, 34% is in this Vanguard ETF. So I'm gonna actually click into that and see what's in this. So 34% of my portfolio in this case is in this Vanguard ETF. Well, what's actually in here? I can see the beta is 0.89. Anything around 1 is where we want it to be. You can do things like borrowing on margin in this case, which I'll go over in another video. But if I go down here, I can see some of the top holdings in this. So you've got AstraZeneca Pharmaceutical, you've got Shell, and you've got ASML Holdings. So you've got a really good mix here of 34%. And if you zoom out over the last 5 years, this one ETF alone has made you a little bit of a profit. Obviously, if I move down here, I believe this is when COVID kicked in. Let me see. Yep, it is. And then you'll actually look down here, and these are all the dividends that have been paid. So you're seeing a dividend is being paid every single quarter. So 320, 620, 920, 1220, 319. So what was it? Last week a dividend was paid. So something to keep an eye on. All right, so I'm gonna go back here. Now let's say general investing isn't for you and you want to do something a little more technical. So if you're interested in what some of the big hedge funds are doing, like Pershing Square with Bill Ackman, like Berkshire with Warren Buffett, you can actually click on these, which I find very, very interesting. Not necessarily to invest in, although you could, but it's always great to see what some of these firms, some of these hedge funds at the top are doing or what they've invested in. One of them I really like, I do greatly admire Bill Ackman. I would love the chance to be able to speak with him one day. But in this case, over the last 5 years, his fund has averaged 120% return. So if you put in 10,000, you'd have 22,000 today. The dividend yield, 1.29%. The expense ratio is 0 because there's no expense ratio on here. We're just simply buying stocks. We're not buying individual ETFs. That brings me to another good point. When you are buying ETFs, you are paying a fee to Vanguard or to iShares or to BlackRock or any of those. When you buy individual stocks in this case, that's why you're seeing an expense ratio of 0, because you're not actually paying anything, because you're not paying anything to M1 to actually trade this. In this case, though, you only have 6 holdings and 24% is in low. So this may be something you're interested in. It may not. It's a lot of concentration in a small number, a small name. And if that's up your alley, that's great. I'm going to go back here and actually look at the Carl Icahn portfolio. So for those that don't know Carl Icahn, fierce investor, got a lot of respect for him. Dividend yields much higher, and he does have more holdings in here, although some of these are very, very small. Occidental Petroleum, another good Warren Buffett bet. The last thing I'm going to do is I'm going to actually go up here into my pies, and then I'm going to actually build a new pie here. So for those of you that say, hey, look, nothing really suits me and what I want, so I'm going to actually call this the Q2 Performance Pie. And what I'm going to do is I'm going to go add a slice. And in this case, I'm just going to go and pick some of my favorite stocks. So, okay, let's just, in no particular order, I'm going to add some of these in. I'm going to say add to basket. I'm going to go back. I'm going to add some Amazon. I'm going to add some Google, Microsoft, Apple, no Meta. Visa is a great holding, a great company. Johnson & Johnson, can't go wrong. Walmart, everybody needs them. And MasterCard. So let's say we're going to add all those. Okay, so I've got some decisions to make. Do I want to equalize everything and make every single one of these stocks equal? Or do I want to have, say, 50% in Tesla? You know what? I'm going to be a little bit more adventurous. I'm going to say I'm going to do 50%. Actually, you know what? I'm going to take all these, equalize them. I'm not going to do that. Let's make sure we do everything equal here for this. Okay, so now I'm going to say continue, and that's it. So I've got a new pie created, performance pie. Now from here, what I can do is I can delete it if I want to. I can get back in here and take a look at what's going on. I can see all my individual holdings. I can click in on an individual stock, see the price earnings per share, the PE ratio, the market cap, what it's done, and any news about it, which I really like. If I go back here though, I can actually schedule and say add to portfolio. Now, in this case, which one do I want to add? In this case, I'll say I want to add it to my 5 potential growth stocks here. I don't have a portfolio in my individual setup anymore. I'm going through some drawdowns and I'm going through some reshuffling for 23, but that's how you would do it. And then you can have as many as you want. And of course you can go through here and do a crypto pie if you want. You could go in here and say, I want every single one of these. I'm going to add them and then I'm going to equalize all these out, continue, etc. I'm not going to go through and do that. In summary, what have we learned today? We've learned what M Finance does. We've looked at what performance in the past from my perspective looked like last year when I went through the original M1 Finance portfolio, created a portfolio from scratch. We've looked at some hedge funds. We've looked at some conservative, some more aggressive funds, ETFs, some of those buckets you can get into that pools all your stocks and ETFs together. We've looked at the expense ratio and we've designed a profitable portfolio, whether you want to go something custom made on your over here or you want to go with something pre-made that M1 already has over here. I think the great thing though about M1 is the fees are non-existent. You get automatic trading, you get access to low-cost ETFs, you get access to research. And this is, again, for those that want to take a more active approach in their investing, this really, really helps out. So I encourage you to create your own portfolio, share them out, let me know, start investing for some maximum returns. I want to thank everyone again for watching, and don't forget to design your financial freedom. Take care. Bye-bye.